Hey guys, and welcome to Road to Forex. I always appreciate you being here with me. Today we are going to be going over order blocks because it's something that I use quite often and it is taught in a lot of different ways. So I want to clear up all that misinformation and also give you something to sink your teeth into whilst you are trading on the charts. So to get into this, order blocks are key concept areas in trading, especially in the Forex and stock markets. They're basically a cluster of orders placed by big institutional investors, and understanding them can really help you make sense of market movements and price action. So what exactly is an order block? Well, it's a zone where a lot of buying or selling happened within a specific price range. These blocks show where institutions have put in a huge volume of orders, creating areas of high liquidity where the price comes back to these zones. It often hits strong support or resistance, which can lead to price reversals or breakouts. As a trader, you can love order blocks because they can help predict where price is likely to go next. By spotting where these big orders are grouped, you get a sense of the market's mood and can make smarter trading decisions. For example, if the price dips back to a bullish order block where there was a lot of buying pressure, it might bounce back up, which could be a great buying opportunity. And we can actually see this happen just the other day. On the flip side, bearish order blocks, which have a lot of selling pressure, might signal a good time to sell when the price revisits that zone, like what I am looking at today. Now, in order to spot order blocks, you need to look at price charts for areas where the price has stayed within a range for a while before making a sharp move. Knowing how to find and use these blocks helps you align your trading with the big players, potentially boosting your success and profits. Let's get into a few examples now. Here we can see, using my indicators, that there is an order block up here. Now, you don't have to pay attention to what the percentages mean. Just note that the red squares are bearish order blocks and the green squares, or rectangles I should say, are the bullish order blocks. Now what I can see through here is the market pushing up towards this order block, these previous highs. Now what happens here, which is fantastic, is it shoots straight up into this order block and wicks, creating what we could say is a double or even a triple top. Now I am using multiple things here, including market structure, to basically signal whether or not there is going to be a sell from this area. Because remember, as we said in the introduction, in these areas we can find heavy resistance and the market can fall down. Now what I like from this particular example is as soon as it comes up and wicks into here, we get a strong move towards the downside, which is perfect for us. Which would be great for an entry from here, putting our stop loss at the top, which is protected by this wick and the order block that has been maintained, and 3 separate tops. And we could take it all the way down, maybe to another large order block here. And then that is what exactly happens. Market pushes through, collects all these order blocks, and again, it bounces off another one. Now you can say they took out 2 other ones, but again, we don't want to use order blocks just by themselves. But as you can see, from this point, likes to take it out, messes around in that area, and then comes and shoots straight back up. Perfect area to have another potential re-entry. Use these order blocks and what the market does in terms of reaction around them to hop back into trades. Hopefully this makes sense to you guys and you can use this to help you in the future.